The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 3rd magnificent Monday edition of the second hour of the Trader's Edge. I'm your host, Steve Rhodes, and hope that everyone out there is off to a great start of their day. Let's make sure that we make it a magical Monday. And we should always remember that what's talked about is a dream. What's envisioned, well, that becomes exciting. What's planned becomes possible. But what's scheduled, folks? What's scheduled becomes real. And I want to say thank you for scheduling some of your time with me this morning. I'm grateful for your presence here today, and I'm here to serve you. So give me a call at 877-927-6648 or internationally 727-445-1044. Remember, if you've got a question, somebody else has that exact same question. So don't call in for me. Don't call in for you, but instead call in for someone else. One of those random acts of kindness out there. This is Magical Monday. Of course, it's Tiger Financials Network. I'm Steve Rhodes, and welcome to the show right now. We've got the Dow trading off about 16 points. She's out at trading at 17,373. S&P is up a point, trading at 2019 composite. NASDAQ composite up 16 points, trading out at 46.46. Russell 2000 up about $2. She's trading at 11.75. Gold's back 5. Silver's back 9 cents right now. Light sweet crude is up 64 cents out here. Leading the charge, the upside price line up $20 this morning. Trading out at 12.26. You've got VIP Shop Holdings up 2%. ANI Pharmaceuticals up 15%. Alumina up about $2. $3.50 up about 2%. Jazzy one, Jazz Pharmaceuticals. We haven't looked at that for a while. We should. That's up $3 and change. Herbalife is up $3. To the downside, Agilent Technologies up 25% out here. Ticker symbol A. Looks to me like the A minus, down 25%. What's the? I don't see. Oh, it's a spinoff. Okay, so there we go. Okay, no big deal. You've got Federated National Holdings, that's off about 12% this morning. Google's down about $3 out here. Again, our call number 877-927-6648. I want to go back. We had just as was going into the last segment of the last hour, we had our caller Sam from Philly. He wanted to take a look at Johnson & Johnson. I only had 30 seconds to really look at it for him, so I did want to cover that. He was looking for an entry point inside of J&J. So let's take a look at this thing on multiple time frames. In fact, let me step back. Let's first step back and take a look at the monthly chart, and then we'll fast forward to the daily chart. So on the monthly chart, here's what we know about Johnson & Johnson. As I pull the stock chart back here, you can see Johnson & Johnson. It's at its all-time highs out here. It's not at it today, but we did see an all-time high during the month of September. Now, there were 130 million shares during that month, and last month it was pushing into that high with 232 million shares. So Johnson & Johnson is broadcasting to you and me and everyone else that it wants to move higher. It's moving into a monthly swing point with volume, pushing into those highs. Someone might argue, hey, maybe it's pushing the lows with volume out there. I say no. When you take a look at that candle, that little hanging man candle, that very bullish hanging man candle out there, what Johnson & Johnson does want to do is move higher. So Sam is on the right track out here. Where's the entry point on this? If we take a look at the weekly chart out here, the weekly is pushing into the swing point from September 26th. It had 29 million shares, and last week 45 million shares. Kind of get the feel. Weekly says, hey, I'm pushing into that swing point with volume. It hasn't tested it yet. Needs to test it. That's the 108.77. Much like the market out here, it's making a 100% move of a move. You do that, you do something different usually. You trade sideways, you consolidate, you build a little bit of a floor out there. Maybe you make a retracement. If we take a look at the daily chart and see what it was doing swing point-wise, the swing point happens to be the September 24th swing point. That's what it's trading inside of right now. That had 5.8 million shares. And on Friday, it was pushing into it with nearly 11 million shares. So you've got this Johnson & Johnson pushing into the swing point with volume on the monthly, on the weekly, on the daily. Bodes well for the Dow. We'd probably take a look at similar type patterns inside of Dow stocks out there. Not IBM, of course, but many other Dow stocks out here. So the question becomes, hey, where does Sam get in on this equity? That's an excellent question. I think first you got to let it test that swing point high. Second, I believe we're in a market that's going to move sideways for a couple of weeks out here, and it's going to be frustrating because folks are going to forget about this powerful move off that October 15th level, and many are going to say, hey, it's only moving sideways and it is time for the market. That's it. It's over. You just had the fireworks celebration, and now it's time to move back to some of these high volume lows down there. That is a camp that I am not in. In fact, I love the fact that I woke up Saturday morning and it was snowing out there. I said it was a sign from the universe, because what bears do when it snows, at least unless you're a polar bear, is they go hibernate for the winter. That's why they call it a Santa Claus rally, because it gets cold out there and the bears just simply go away. Today, by the way, is day number 1 of the favorable seasonal cycle. Kind of interesting that it happens right around November out there. Now, of course, I'm doing this show. I'm having a little bit of fun, a little bit of humor with you out there. I mean, after all, if we didn't have any kind of humor, that would not be very fun at all. But there is some reality to that, to what it is that I just said. Now, if we take a look at Johnson & Johnson, we go from the lows out here. We go to the highs that were, right now at this stage here from Friday out here. A normal retracement. Hey, normal retracement would be $100.10. I don't expect that's what we're going to see. But if you could pick this up right around that 103.18 level, that would be pretty nice out there. I'd say you'd also look down maybe at the 120-minute chart, maybe look for an A to B equals CD pattern, maybe look for a Chapman wave, fourth wave down, fourth to a seventh wave down. Those would be the levels. Those would be the patterns that I'd be looking at inside of Johnson & Johnson. So I hope that helps Sam in Philly, and thanks for calling. Just sorry that I couldn't get to you with enough time to go during that last segment. So that means don't delay, just so you can pick up that phone if you've got a question out there. Right now at 877-927-6648. Okay, so now what do we want to go look at? Let's go take a look at some monthly charts out here. And let's first go take a look at, now I'm not going to go to the Qs first. I first want to go to the NASDAQ composite out here. So I want to put up the monthly chart on this. So let's turn over to monthly. Maybe I could just actually turn over to the quarterly chart. Why don't I do that? Of course, we did not end a quarter out here, but it helps to prove, I suppose it helps to prove the point. We'll switch it to, here we're in the quarterly chart right now. And on the quarterly chart, all right, we're going from the swing point low here, just to kind of recap where we're at. If we take a look at the March 09 lows, that's going to be your A point of the A to B equals CD to the upside. You make a move up into the highs on April the 1st, the month ended April. Quarterly. The quarter ended March 31st, right? So that's why so it's a quarter ended March 31st. So you go up into that B point that is at a high of 28.8775. Makes a retracement down into the quarter ended September of 2011. That retracement, a less than a 0.382 retracement, says you're going to have a strong move. What kind of move? You're going to do more than a 1-to-1. Have we done more than a 1-to-1 A to B equals CD? Yes, we have. Have we done more than a 1-to-1 0.272? Yes, we have. Prices came down actually and just tested the 8 period, or what Basil likes to call the 9 period EMA. I like to use 8 and 13. Why? Because they're two numbers in the Fibonacci summation sequence. But either way, they work out here. So price came down, tested that level. We're now in the fourth quarter, clearly. There's certainly no bearish reversal signals. But the point that I was really going to make out here was the mere fact that, and we're going to take a look at it on a monthly basis, but here I'm going to just simply show you on a quarterly basis out here. Still a strong move going on. You've got price that's traveling on the left-hand side of that C to D leg out there. That is strong like bull. That is not weak like bear out there at all. And that says you're traveling inside that swing point, and I don't care whether it's volume or not. It says you're going to go test out that swing point high. So where is the NASDAQ composite headed to? All the way back to 51.32. 52 out there. That's a beautiful thing. That is where price is headed to. Hey, the 1 to 1.618, 49.2366. The 1 to 2 is 55.43. So I'd have to say 55.43 to 51.32 is where the NASDAQ composite is headed to. Now, that was the quarterly chart out there. If we go take a look at the monthly chart, right? We just finished the month. This just means I need to just do a little bit of squashing. Need to scrunch it over a bit out here. The blue line going across, that's our quarterly number. But let's go ahead and we'll remove the quarterly number. Let's take a look at the monthly swing point out here. The monthly swing point for the composite. Look, in best cases, if you really believe that the bears were going to go ahead and take control of this market and just start shoving things down, you've got to at least see the composite give up that swing point low out here. And it has not happened. We are now in month 1, 2, 3, 4, 5. We're now in month 6. Of staying with inside that swing point. The first month up above that level, up above 43.55. That took place in June of 2014, the month of June 2014 out here. And so you are inside that swing point. You close inside a swing point. It says you want to go test the high. That's what's going on the monthly chart. Let's see if we're inside the weekly swing point out here. Now I got to do some real scrunching. I got to really move this thing back. But for you folks, I will do that. It'd be my pleasure. Come on, populate for me, would you? Populate. There we go. Okay. So now let's take a look. We know 43.55 happens to be the swing point, the bottom of the swing point from Now let's take a look at the actual swing point high on a weekly basis out here. That happens to be the week of March 6, 2010. 47.22 is the number. I'm going to leave the monthly up here. My thing is I'm going to change the color of the monthly just that I don't confuse you. Let's just go ahead and we'll make that red out there. Apply that. I'll make the color red. Let me see. That does that. Okay, good. So now we're all set out there. Let's move all the way back. So 47.22.14. Okay, you're not inside the weekly swing point yet. 47.22.14. So that I'd have to say that's where it's likely headed to. You close inside 47.22. What does that say? That says, hey, you're going to go up and you're going to at least test those highs out there. And so that's what's going on inside of the NASDAQ composite. Let's go take a look at the New York Stock Exchange. So let's go take a look at the NYSE. And the NYSE, last month I thought was a all-important test out there. In fact, when the markets were moving lower, even though I was looking at other signals that said the market's going to make a significant bottom out here, there was one thing that concerned me, and that was this puppy. That was the New York Stock Exchange. I'm going to switch over to the monthly chart out here, and what it is that was concerning me in the monthly chart, I'm going to remove a couple of other patterns out here on the screen, just make it a little bit easier to look at out here. So there we go. So now we've just got the date. And what had concerned me was the mere fact that price had broken back below its 2007 high. So price, in essence, inside of the NYSE, just to give you a perspective out here, if we take a look at the consolidation pattern inside of the New York Stock Exchange, really you can come all the way back into the time period of 1997, May, June of 1997. And here's your consolidation pattern out here. 43.95 is basically about the low. 10.387 is the high. So when we get back from this break, let's continue looking at the New York Stock Exchange out here because it provides us with a ton of information. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 37. S&P's down about 3 points right now. So we're going back and taking a look at the New York Stock Exchange. And what I'm showing you here is a very long-term consolidation pattern from 97. We broke out of the consolidation pattern inside the New York Stock Exchange. It was the last index to do that. Did it in March of 2014. Now, when you break a consolidation pattern, what you like to see is you like to be able to see price come back and test it. Well, that's in fact what took place during the month of April 2014. Well, guess what? That's exactly what took place out here during the month of October. So price came down and it tested that level, which is 10,387.17, and it rejected that. So, with price getting down there, if we were going to close back below 10,387.17, the message that it would carry with it would be that it was a false break topside. Instead, what this has done is this is giving you more of the bullish case to the upside out here inside of the New York Stock Exchange. It does say, even though it's hard to fathom, it does say a 16,000 New York Stock Exchange indice reading is in its future out here, so long as it stays above 10,387.17. Look, we'll take things one day at a time out here, but that was the weakest of them all, potentially. Now, it's no longer the weakest of them all. In fact, it was the New York Stock Exchange that gave us the signals that the market was forming a bottom. If we take a look at the New York Stock Exchange, I'm not going to belabor this and go through this because I had done it so many times as the bottom was forming, and I don't want to really bore anybody out there. But it was creating the, come on, give me my cursor back here. Without my cursor, Always visible, always visible. There we go. As we take a look at the New York Stock Exchange, it was forming that beautiful pattern of rising bottoms in its price oscillator. It did that here back in the October 13th, 14th, 15th time frame out there. Now what it's got is had a nice rising price oscillator out here. That's a beautiful thing. That's typically not how markets end. I don't expect that that's how markets are going to end here as we speak right now. I do expect it's going to be a frustrating. I think this one's going to be a frustrating sideways move here for a while. And that means it's going to frustrate the bulls and it's going to frustrate the bears out there. And I hate to say it, but that doesn't mean that there's not some good trades out there in the marketplace. I just think it's probably inside the sectors, inside the S&P. Inside the sectors inside the S&P, maybe the indices out here, it's going to be a bit frustrating out here. My expectation was, hey, maybe the market would go ahead and move higher into Tuesday. But after Friday's move out there, after that acceleration, from my standpoint, that kind of completed the pattern. That was why when I was on the air doing the first hour on Friday and then with Tom, my forecast was for this choppy road ahead here for a couple of weeks. And then it's off to the races. Then it's the moonshot out there, and it'll go beyond the moon out here inside of the markets. So that's what's going on inside of the larger picture. Now, we just took a look at the composite. We just took a look at the New York Stock Exchange. But I think that's pretty good. That's a pretty good indication of what really went on last month out there. We took a look at maybe, and even inside the Russell 2000, if I pull up the Russell 2000 just as an example out here, let me go back and pull up the Russell. Let's go take a look at it. It's basically flat here this morning. But if we look at this on a monthly time frame, let me try to pull this back and see what, I can do this here. Let me just do this let me pull up the monthly time frame. And let me turn off a couple of things out here just simply to clean things up, make it a little bit easier for you to look at. So turn all this stuff off. Okay, now we've got the monthly time frame out here for the Russell. Let's see. I say I can do it. Let's see if I can actually do this out here. And I'm going to come off of the 2000 high, and I'm going to draw a straight line. Let me use the red line. Come on. There we go. So let's change over to the red line out here. I'm going to use the swing point high from 2000, and then I'm going to use the swing point high from 2007 out here. And here's what we can see. You see this little trend line that's out there? What is kind of cool is that we saw price break above that trend line. That was back in October 2013, interestingly enough. Came back and tested it during November 2013. Came back and tested it during February 2014. Tested again in May 2014. Tested it last month. Rejected it. You can see just that little consolidation pattern out here. That little consolidation pattern, which is about a 135-point move out here, that's what goes ahead and caps off. At least it completes, is really what I should say. It doesn't cap it off. It completes the measured move of its consolidation pattern inside of the Russell. And the Russell 2000 has a consolidating pattern that goes from about these levels right here, which is down around 338 or so, up to the high out here of about 858. So that's what? That's 550 points, 500 points, we call it. 500 on top of 850. That gets you to your 1350 level. That is where the Russell 2000 is going. You can't bust them down. It's going to go bust them up. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 34. S&P is down 1 as we speak right now. Earlier, during the first hour, we were taking a look at a couple of gold stocks, one specifically, Rand Gold Resources. GOLD is the ticker symbol. Now, at that stage of trading, it had formed an island bottom reversal pattern. That has now since gone away as it pulled back into at least the high of last Friday. 59.39 was that high. What we've seen here this morning is a push down to 59.23. So no, looking for bottoming, forming, reversal signals. The bulls and the bears, they can't hide. We just have to learn how to read the message of the markets. And we use Japanese candlesticks to do that. Now, candlesticks on their own are not to be used as a trading system. There is no successful trading system that I have seen out there based on just simply using Japanese candlesticks. I've tried it. I've gone out there and, I've run the back testing on it. Now, I received a lot of emails, and thank you, by the way. I really do appreciate you. I know how busy everyone is, so I know that it takes time for you to actually sit down at the computer and look at my email address and go ahead and type in, your thoughts on the market and or something that I might have overlooked. And so I got a lot of emails about the formation of the hammerish style-looking candles that had formed inside of the Dow, inside of the diamonds, inside of the spies, and so forth. And so I'm going to put this chart on my screen out here now. Today, I got to point out the candles to you, but not to your distant future. You'll be able to really see exactly what these are. Now, they look like hammers. They smell like hammers, but they're not hammer candles. They're what are referred to as a hanging man candle. So it looks like a hammer. Now, what's the difference? A hanging man candle is going to occur as the markets are moving higher. A hammer candle only takes place at lows out here, and you need to see enough of a retracement in order for there to be a hammer candle. So we're looking at the chart of the diamonds as an example. And inside this chart here for the diamonds, I've got, this goes back, it looks like I'm going back into 2000 and 1998 is where I'm taking this chart back. Now, since 1998, in searching for hammers on a monthly basis inside of the diamonds, there are no hammer candles, but there are two hanging man candles out here. One that actually formed out here in April. So this was April of 2014, and one that formed here last month. Now, last month's candle, if you take a look at that lower shadow, that wick out here, boy, it tells you that the bulls came on strong like a bull out here. Now, there are many people that believe that the hanging man is a bearish candle. And you know what? They're right. But it's not a reversal candle. Technically speaking, if you were to list all 30 Japanese candlesticks out there, the hanging man would go ahead and would be categorized under a bearish pattern. So those of you that believe that it's a bearish candle out there, you are absolutely right. But is it bearish? No. See, there's a difference, in my opinion, between a bearish candle and something that is bearish out there. It always has been difficult for me to comprehend how you can see a candle like this where clearly you can see that the bulls have charged because, it means during the session that the bears were able to go ahead and push prices down. But then all of a sudden you saw prices being moved up by the bulls here, and you start to finish up towards its session highs out there. Of bearish candles out here, it is one of the least bearish. It has a bearish connotation. It's classified as bearish. I have my own philosophy on how the Japanese 900 years ago came up with some of these very good creative names and what they might have been doing while they were sitting around, because they were rice traders out there, and sake is made out of rice and water, and so I could see if we were given the responsibility to come up with some funny names. I've got a good enough sense of humor. I could come up with some as well. So what I want you to understand is it's neither, from my standpoint, with regard to its meaning, it's neither bullish or bearish. It's from a reversal standpoint out here. It has a bearish connotation, but I think it's more bullish than it is bearish out here. That's inside the diamonds. It's the same thing if we took a look at the Dow Jones Industrial. So it'll show up no matter what if you're taking a look at the Dow Jones Industrial. As long as we're on the monthly chart out here and we're taking a look at hammer candles or hanging man inside the Dow, you see I can pull this back, and there are no other hints of it. But let's put this SPY out here. And the reason I want to share that is misusing candles. So inside the SPY, it doesn't show up as a hanging man, but it is out here. I don't really want you to get trapped into misusing candles. There's a lot of information out on the internet with regard to the use of candles out there. If you really want to master the use of candles, I've done a one-day workshop if you click on my name on the Trader's Edge at TFNN.com, you can get access to that workshop and what I do is I go ahead and I get rid of all the noise out there so that you can use the specific candlesticks, the ones that you have to pay attention to, the strength of them in that one day workshop out there. So if you're going to use, and I suggest that you do, what I have found is that There are books out there about Japanese candlesticks. The best one, I think, is written by Steve Nissen. So he's got the best book out there, but he doesn't teach you how to trade with it. And then you've got books about technical patterns, but they don't necessarily, give you the signals to learn to really be able to apply it all. You got to connect the dots, and that's really what's really important to do out here. So these are the monthly charts that we're taking a look at inside here. Now, if you take a look at weekly charts and you want to understand hammer candles out here, well, that's a whole different story. Now, take a look at the and there's hammer and hanging man candles out here. Take a look. This is the weekly charts here for the S&P 500. And if you go back into the week of August 12, 2011 out here, you can see that formed a hammer. That hammer candle, by the way, that was tested the week of October 7, 2011. Hammer candles, the expression that Stevie likes to share with you. If you see a close below a hammer candle, if you're long, you're wrong. That means you're going to go down to the next level of support. Here's a hanging man candle that took place the week of October 21st. That turned out to be bearish? No. Here's a hanging man candle that took place the week of August 3rd, 2012. That turned out to be bearish? No. Here's one on a weekly chart for the S&P again the week of November 11th. Did that turn out to be bearish? No. How about the week ended February 2013? Turned out to be bearish? No. How about, I know you're getting tired of that, kind of monotone no out there, but I would rather the charts prove the point to you than you believe me or me really prove the point. It's really the charts, right? It's really the patterns that go on inside of the charts. Take a look at the weekend of November 22nd, 2013. Was that bearish? No. Now, the next 2 weeks were doji candles. Those were telling us that the market was tired out there. Those candles gave us big pieces of information out here. The market just simply pulled back for a couple of weeks. That was it. And then it formed this hammer candle back here on February 7, 2014 out there. And we've just seen, and the market, of course, obviously moved higher. That didn't get tested. What did we just see here? That took place the week ended October 17th. Yep, another hammer candle out there inside of the marketplace. So these hammer candles, they are very important to pay attention to. Hey, look, even on the way down out here, this only takes me back into 2009. Let me change the data series. I can show you some hammer candles that I know failed out here. I just got to get more trading days out here. Let me put in about 15,000 trading days. How about that? That ought to be enough inside of the weekly charts to find some hammers that failed out here back in 2007, right? So we take a look at actually 2008, July 18th, 2008. So how about this? Let's take a look at as the highs were made in July of 2007. Markets had pulled back. There was a hammer candle that actually formed back here on August 31st, 2007. Market moved higher and finally made their highs in October 2007. The next time we saw a hammer candle was back here in July of 2008. Once that low got broken, and it happened to be broken, there was a hammer candle that actually formed in September of 2008. That first hammer candle was broken during the month of October 2008, the week of October 2008, October 3rd to be specific. Well, guess what? Both hammer candles were broken right back then. So that really breaks when you break a hammer low. It's just a great indication that you are going to move lower down to the next level of support out there. So just helpful to what I want you to do is I want you to use these signals to your advantage. After all, that's why they were created, and they are a wonderful tool and a wonderful advantage to have. Hey, let's go out to Irvine, California, out there to Sam. Sam, thanks for calling. Thanks for holding. How you doing today?
I'm doing fantastic, Steve. Thank you very much for a very informative and didactic program that you have every day. I know you put a lot of work into it, and I'm grateful.
Well, thank you. We're grateful that you listen in, so we appreciate it. Now, how are things in Irvine, California?
Beautiful, sunny, about 68 degrees. Perfect.
Gotta love it. Gotta love it. And you want to take a look at ticker symbol LH.
Yep.
I'll pull that up. Tell us what you're doing, how I can assist you.
I've been following this company for over a couple of years, and every so often they have so much of correction for some news regarding something that didn't work out or the deal that they didn't get.
Okay.
And I was trying to put 4% of my trading capital into that and keep it all the way through Black Friday. I was wondering if you think it's a good time to go in the water.
Now, in this case here, you're looking at Laboratory Corp because of a fundamental viewpoint of you follow it or you're familiar with the industry, or?
Yes, somewhat. Yes.
Okay. Yeah. So, today's not a good day for it, that's for sure. And you've got this big volume move to the downside, 3.7 million shares already. The last time that I had any movement, though, was when it actually broke out. So let's actually take a look at that pattern. I'm going to clean a couple of things up on the chart out here just to make it a little bit cleaner for us to look at. Now, when we take a look at Laboratory Corp, this had a nice sign of strength out here, and that was the day of the trading session of March 26, 2014, right around the 95.42 level. That was pretty good volume. When this thing pulled back, your ideal buy area inside this equity was on October 15th, because it was pulling back with 960,000 shares into a breakout that had, 4 times the volume, plus 4.2 million shares. Now, you've got volume off of the highs. And almost in one sense, it's almost like it's now in reversal top. So I'm going to suggest to you that if you are interested in getting in on this equity because the 95.42-ish level has held before, that's what I would be looking at. This equity ought to run down to that October 15th low. Now, it's not a high volume low or anything. The volume down there was 960,000 shares. And so what you would ideally do, Sam, is you would use that volume on that trading session of October 15th as your gauge. You'd like to really see this equity pull back into that area with less than 960,000 shares. I recognize that it's a sign of strength that has 4.2 million shares, but with the volume off of the highs like you have today, this stock is signaling that its Christmas selling season of markdown has begun. And the reason that you got to be concerned with this equity is because the actual high volume low from December of 2013, and that's at $87 and a penny, that actually is in play. If it breaks 95.42, this thing, your buy area on this is probably around $87 and a penny. Now, you kind of following along with what I'm looking at on the chart out here? Now, I don't know anything fundamentally about it, but I like to believe that the most fundamental thing about any stock chart is what the buyers and sellers are doing. And no matter what the news is, the problem is I can never go back to a stock chart and remember the day and remember what kind of news came out of it. So I think today maybe was the loss of a contract or something along those lines out here. But I think if it were me putting my money at risk, I would wait for 95.42 to be tested, or better yet, wait and see how the level from December of 2013, right around the 87.01 area, is handled. That's going to require a close. That really requires a close not below 95.42. It really requires a close below 93.46 out there.
I definitely appreciate your views, but I want to ask you a question. If you could go back on your charts and look at the same similar situation when the stock took the same amount of correction, 7 to 10%, and recovered very shortly after that. And
now, where am I going back to? So am I going back to the December 11th?
2 years.
2 years. 3 years. Is there a specific day? So are you?
I don't recall that, but I've seen this. It does that very often. I remember at least recall 3 times for the last 2 years that had $6 to $10 correction based on the price of $85 to $90, and recovered immediately right after that. I look at this because it is institutionally held very heavily, like 98%.
Okay.
And the PE is 17 only. And usually revert to the means, maybe that's a factor in here. I don't know.
Yeah.
Because you have the chart, just wanted to ask you.
No problem. And so you bring up a good thing. And look, what it's all about, and this is why we work together as a team, that's you and me, because 4 eyes are always stronger than 2. And it's really all about pattern recognition. And, and so the patterns that you're picking up on, that you're sharing on, are not something that somebody might normally pick up on. So that's great. And so thanks for sharing. Can you stick with us through this break? We'll try to put that piece of the puzzle together for Sam in beautiful Irvine. Is it Irvine or Irvine? But whatever it is, we're going to go back into California when we get back, folks. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 40, S&P down 1.5, NASDAQ Composite up 11. We're going back out to Sam in Irvine, California. We're taking a look at ticker symbol LH. LH is Laboratory Corp Holdings. And Sam's question, he's pointed out a behavior, a pattern behavior inside of this equity. And he's asked me to go back and take a look at some prior patterns that would be similar, meaning it's had some bad news out there and some selling. So, Sam, what I've done is I've come back to the date of July 19, 2012. to try to find something similar, a couple years ago. And on July 19th of 2012, it had volume of about 2.5 million shares. Now, it wasn't really volume off of the highs out there, but it was pretty close. And what it did was it continued to trade down further for about 3 or 4 trading sessions. It wasn't until the first time that this saw some kind of sign of strength, which is you talk about our institutions going to find value in it, because you mentioned that, that was one of your criteria as a reason to go ahead and try to take a position in it. And we saw in the date of August 1st, 2012, that type of institutional buying, because there was a gap up. They weren't afraid because there was volume on that trading session of 5.4 million shares, and so they weren't really afraid of that gap down that we had. In fact, they overpowered it, and price got back up there, but it finally did come back down and tested swing point from June of 2012. So I just point out that pattern behavior, it's not where I have seen a capitulation low. Where it was just overdone. And that's even in December of 2013, that high volume moved to the downside. That area still got tested again with much lighter volume back here in February. And so it kind of moved sideways. And I think your question was, will this stock move higher into Thanksgiving? Is that,
yes, that is
as I recall?
correct.
Yeah. You know what I really think is, so I give you my real opinion,
yes.
This market could move sideways into Thanksgiving. We just began November. I really do believe, based on other patterns, and so you brought up pattern recognition, I really believe that based on patterns, as bullish as I believe the markets are, and they are, without question, I can give you the pattern reasons why this market could actually move sideways for a couple of weeks, maybe even into Thanksgiving out there.
So your views prior to the Friday about the Santa Claus rally is still in place?
Absolutely. Yeah, this is actually, this rally probably goes higher for another year.
I see.
Yeah, but it still means you want to try to buy right out here, and at this stage, and always remember, I am always so willing to step back and look at the charts the very next moment if there's a reason that my forecast or other tools I take a look at are saying something different. So I don't really get married to a position, but right now it's how I'm calling it. So I would still believe inside this equity, you would be better off waiting for that 95.42-ish type area. That little doji up at the highs out here, and this is all-time highs, and that was on October 31st on Friday. That had a lot of meaning because it was up at resistance. It was telling you that the market was tired. You don't like to see volume off the highs like it had today, no matter what the news is. So, let this thing pull back to an area where you're in maybe a little bit better buying position.
I heed to that. Thank you very much, Steve. I'm glad I spoke to you.
My pleasure. I hope the trade works out for you. Have a great day. That was Sam in Irvine, California. And you know what, folks? Time absolutely flies here. Thanks so much for all of the callers. That always makes times go faster, which we love. Stay tuned. Our man Basil Chapman, he's up next. He'll tell you where the markets are going to. It is Magnificent Monday. Thanks so much for joining us. Have a great day. I look forward to seeing you tomorrow. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.